Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: India's equity markets rally as traders react to more details of the India-US trade deal. Bullish global cues add to the momentum. The Sensex and the Nifty gain over 0.5% each, clocking their second consecutive day of gains. The rupee strengthens as banks sell dollars to support foreign inflows into equity. Commerce Minister Piyush Goyal says India's tariffs could be slashed to 18% within the next 5 days. Tells CNBC TV 18 that an executive order is expected this week, and roughly 35% of India's exports will be subject to 18% rates, and 50% of India's exports will face zero tariffs once the formal agreement is inked in March. Indian exports of steel and aluminium will still be subject to 50% tariffs under a U.S. legal framework that deals with national security. Sources say tariffs on the Harley-Davidson bikes could come down to zero once the final deal is signed, adding the tariffs on American luxury cars would be cut to 30% over the course of a decade. The Commerce Minister refuses to comment on the U.S. executive order that explicitly states that India will halt the imports of Russian oil. Says it's up to the External Affairs Ministry to explain. Fairfax and Emirates NBD have submitted bids for IDBI Bank. Kotak Bank clarifies to exchanges that it's out of the race. Sources say the government had sought unconditional offers for IDBI Bank and made it clear any conditions attached would render the offer invalid. The SBI stock up 7% on the back of strong earnings and an uptick in credit growth guidance. The bank reported a record 20,000 crore rupee net profit in Q3. Brokerages raised their ratings and target price for the stock, citing robust loan growth, improved asset quality and reduced credit costs. Japanese stocks skyrocket after Prime Minister Sane Takaichi scores a landslide victory in snap polls with 316 of the 465 seats. This is the Liberal Democratic Party's largest election victory since World War II. The Lok Sabha is adjourned for the day over a standoff between opposition and the government over Rahul Gandhi's demand that he be allowed to speak before a discussion on the union budget. Gandhi says an agreement had been reached with the Speaker on some opposition MPs being allowed to speak. The Parliamentary Affairs Minister says there was no such deal. Well, let's start with the day's market action. Dalal Street held on to its opening gains, with the Nifty regaining its levels above the 25,800 mark. Nearly 40 Nifty stocks closing higher today, led by Reliance Industries and State Bank of India. The Nifty closing 170 points higher, 485 on the Sensex. The Nifty Bank about 548 points higher, and the mid-cap index almost 950 points higher today. Frontline indices did close with gains of more than 0.5%. That was the picture for the equity markets. Let's also talk about the rupee. The rupee strengthened as banks sold dollars to support foreign inflows into equity. Prashant is standing by now to wrap up the day's market action for us. Prashant, strong start on the back of strong global cues.
A very good Monday, and the market, of course, recognizing two factors. One, of course, the fact that the U.S. market, which is sold off about 6.5% from the highs, posted a 2% turnaround on Friday. That is one. And everything along with it came back. Precious metals, Bitcoin, which is a bit of a risk sentiment indicator, and a bunch of other things as well. The other one, of course, was what happened over the weekend, which is the India-US deal joint statement, which was put up. And that showed that there was very little by way of a slip between the headline announcement earlier last week and the actual document. Of course, many more details will come through, when the deal is signed in mid-March. But I think what also happened is that we got clarity from Minister Piyush Goyal that the 18% that India gets, we won't have to wait till mid-March. That'll come via an executive order from President Trump, and that's expected over the course of this week. So it's kind of immediate. Over the weekend, expectation was that it's gone to 50, it's gone to 25, and 18 perhaps when the deal is signed. So this is maybe a bit of a preponement as far as the timeline is concerned. The Nifty up on your screen, the Nifty Bank did doing quite well. And of course, the PSU Bank index, 3% star, and I'll come to the stock there, which of course made all the difference. Mid-cap and small-cap indices, mid-cap index 1.5%, and the small-cap index was up about 2% or so as well. Now, SBI with the 7.5% pop, adding almost about 1 lakh crores in market capitalization in a single day after super numbers. Shriram Finance was up 6%, big one there. So about 1,063. It's kind of gone sideways for the last few. Grasim was up about 4. Titan was up about 3. Dr. Reddy's, Ultratech, Tata Steel, Hindalco, lots of old economy stocks which did very well. On the downside, Max Health, about 3% lower. Actually, that was the only noticeable cut. Power Grid had a 16% move last week, so that was down 1%. And there was a ITC, which, of course, rallied hard towards the end of last week, which also was down about 1%. So that's a large cap pack for you.
All right, Prashant, many thanks. And Japan's benchmark index soaring to a record high. This after Prime Minister Sane Takaichi's party won the snap elections by a landslide. Takaichi's Liberal Democratic Party secured a supermajority in the lower house, winning 319 seats. This now allows her to override the upper chamber, which she does not currently control. But the top story this evening, Commerce Minister Piyush Goyal has said that India's tariffs could be slashed to 18% within the next 5 days. In a conversation with CNBC TV 18, after both nations agreed to a framework of an interim deal, Goyal said that a White House executive order to cut tariffs to 18% is expected this week. Remember, the order to cut tariffs from 50 to 25% was issued over the weekend. Now, the Commerce Minister also said that roughly 35% of Indian exports will be subject to 18% tariffs post the order. He told us that 50% export will face zero tariffs when the formal agreement is inked in March. Sources add that tariffs on bikes from Harley-Davidson could come down to zero once the final deal is signed. The Commerce Minister, however, refused to comment on the U.S. executive order, which explicitly states that India will have to halt imports of Russian oil. The Commerce Minister said it's up to the External Affairs Ministry to explain the matter. Take a look.
I would suspect any day during this week, the executive order to reduce tariffs to 18% should be coming out. It would require a signing by the Honorable President of the United States of America. But now, having entered into the framework agreement and all terms being finalized, I see no difficulty in that. This is the first tranche of a potential bilateral trade agreement. And we will continue to work with the U.S. to see areas of mutual benefit which can be considered in the final bilateral trade agreement. And we will certainly be taking up Section 232 tariffs in the course of those discussions.
Speaking about the executive order, which was issued almost simultaneously by the White House along with a joint statement, it said that India has committed to stop directly or indirectly importing Russian oil and will purchase products from the United States. Could you give us a sense of what's the understanding? Because our Russian oil purchases have been coming down.
This is a subject that doesn't get included in the trade deal, nor do I handle it. I think it would best be answered by the Foreign Office, who have already made certain clarifications in this regard.
How are we going to handle this? Because the US will be monitoring whether we are buying directly or indirectly.
I think this is best answered by the Foreign Office, because I wouldn't know exactly what they mean by this comment and whether any discussions have been held.
Well, that is the Commerce Minister saying that the Ministry of External Affairs will respond to the executive order which explicitly states that India will not buy Russian oil, and if it chooses to do so, then President Trump and his administration is free to reimpose that 25% ad valorem duty. Moving now to the banking sector, Fairfax Financial and Emirates NBD have submitted bids for IDBI Bank. We also learned from sources the government had sought unconditional offers for IDBI Bank and made it clear any condition attached would render the offer invalid. Ritu's here with more. So it's a two-horse race, Ritu, Fairfax Advisors and NBD.
Well, it's been a long wait, hasn't it? And now the IDBI Bank disinvestment process is finally moving ahead, with two bidders coming forward to submit financial bids for the bank. We understand from sources that Fairfax and Emirates NBD are the two players that have made bids, while the third suitor, that is Kotak Mahindra Bank, has disclosed to exchanges that it did not submit any offer for IDBI Bank. Remember, we were the first to report on these three potential suitors back in 2024, but now with Kotak Bank out of the race, the contest has narrowed down to these two foreign players. Now, Fairfax is seen as the front runner, given Emirates NBD may already have its hands full with the RBL Bank acquisition. The government has also officially confirmed in a statement that financial bids have been received and these will now be evaluated as per the procedure. Now, sources do indicate if Fairfax emerges as the winning bidder, it could explore a potential merger between IDBI Bank and CSB Bank, where Fairfax is already the promoter, although that is going to be a post-acquisition decision that will be subject to various various approvals. A few key guardrails to keep in mind here. The government, of course, retains the right to reject any bid in consultation with the RBI. Number two, all of the bids had to be unconditional, so any conditions attached are going to make the offer invalid. And three, once submitted, the bidders cannot seek any changes to the share purchase agreement. Now, in terms of the transaction size, the government is looking to sell 60.7% combined stake in IDBI Bank, where post-divestment, the government will retain 15% and LIC another 19% in IDBI Bank. Now we have to wait and see which of the two offers a better proposition for the government.
All right, Ritu, many thanks. We are going to be tracking that. It has, of course, been long awaited. Now, shares of State Bank of India soaring in trade, ending over 7% higher. This on the back of very strong earnings and an uptick in the credit growth guidance. The bank reported a record 20,000 crore rupee net profit in Q3. Speaking to CNBC TV 18, SBI Chief C.S. Sethi said the bank is sticking to the net interest margin guidance of about 3%, and it's upped its credit growth guidance.
I think we are sticking to the NIM of about 3%. For the current, the full year NIM would be around about 3%. And on the credit costs, I think our earlier guidance was 50 basis points. We are still sticking to it. There are not going to be any surprises on the asset quality side.
That's SBI. And staying with the banking sector, large banking stocks rallied in trade as investors priced in a structural change in deposit insurance premiums that will come into effect on the 1st of April. Essentially, stronger banks will now have to pay comparatively lesser to insure customer deposits. These changes are expected to bring down costs for stronger banks, boost profitability, and influence earning estimates for the next fiscal year.
In terms of stability of the banking sector, one of the most far-reaching impact policy points has been this deposit insurance. I mean, we have had across a set of banks in the last 5-7 years situations where people were afraid that deposit runs are going to happen and this and that, but nothing of the sort has happened. In one case, rescues have been organized, bringing in other banks and so on and so forth.
While global ratings firms Moody has projected India will grow at a rate of 6.4% in FY27. This would be the fastest rate among G20 economies. However, Moody's forecast is lower than the 7.4% growth projected by Chief Economic Advisor V. Anantha Nageshwaran. The ratings firm said that structural reforms, GST rate rationalization, and a stable monetary policy will boost India's growth. Now, in international news, Russian forces continue to attack Ukraine, killing at least 3 people in Ukraine's eastern and southern regions. Officials have said that the Russian drone strikes have also injured 6 people. Back home, Lok Sabha adjourned for the day over a standoff between opposition and government over Rahul Gandhi's demand that he be allowed to speak before a discussion on the union budget. Gandhi says an agreement had been reached with the Speaker on some opposition MPs being allowed to speak. The Parliamentary Affairs Minister says there was no such deal. We'll head into a break, but up next, a report published by IBM has urged CEOs in Asia Pacific to adopt sovereign cloud strategies. That and more when we return. IBM Sandeep Patel joins us when we get back. A report published by IBM has urged CEOs in the Asia-Pacific region to prioritize adopting sovereign cloud strategies, AI-powered workflow transformation and hybrid cloud architectures to unlock the value of enterprise data. Sandeep Patel, the MD of IBM India, joins us now. Sandeep, many thanks for joining us. Why the emphasis on adopting sovereign strategies when it comes to data and AI? We're starting to see this across jurisdictions. India, of course, by way of its own law, has pushed for data localization as well. What are you asking CEOs to do?
Look, I think if you just look at the data out there, Gartner predicts that more than about 75% of all enterprises outside the US will have a digital sovereignty strategy by 2030. Now, for years, what we've heard is that digital sovereignty and their discussions have primarily focused on data residency. AI has fundamentally changed that model, and it's primarily because AI, uses data, and data's value is unleashed where you have solutions and others that are coming out from AI. So as a result, the sovereignty today extends beyond where data lives, and it fundamentally needs to have a few other questions answered. Number one, who operates the platform and under which authority? Where the AI models run and how specifically inference is governed, who has the administrative access and how it's informed, how it's enforced across the different administrative platforms, and how can compliance be demonstrated continuously and not just documented. So the three considerations which we believe that CEOs must consider is data sovereignty, technology sovereignty, and operational sovereignty. And let me just give you a context around that. Data sovereignty is important because the economic value of data is realized at the point of processing, not necessarily storage. And so data sovereignty ensures trust and transparency with customers and regulators by maintaining governance under Indian jurisdiction throughout the data lifecycle, and therefore, it drives the benefits locally. The technology sovereignty is all about the fact that technology stacks should be designed for choice that is engineered to move fluidly across on-premise, private, and hybrid environments without a platform lock-in. It should be built on open source foundations with transparency, auditability, and reduced lock-in for long-term control. And lastly, its operational sovereignty becomes important because true operational sovereignty means that you are insulating your core processes so that uptime and continuity are guaranteed regardless of interventions from external jurisdictions, as we've sort of seen over the years.
That last point is important because we saw a very public case play out recently on account of that. So what does this then mean for service providers who are non-Indian, who are servicing the Indian market? Of course, the localization rules apply, but to the two of the other points that you make, what does this then mean for global companies who are accessing the Indian market and for Indian customers who are working with these global companies?
So I think what's more important is Indian firms, Indian enterprises, particularly those that are regulated, right? They truly now really need to think about sovereignty beyond where data lives. It encompasses now who controls the models, decisions, outcomes, and so on and so forth, which is precisely why we've actually just announced it will be generally available by the middle of the year. IBM's Sovereign Core is going to be industry's first AI-ready sovereign software that gives enterprises provable control to build and scale trusted AI environments. And I think this is becoming more and more relevant, specifically because of where AI is going and the value that organizations are looking to derive from AI. So the fundamental architecture shift which is required is one where sovereignty becomes an inherent property of the platform itself. And it's just not a contractual promise or a deployment variant. So there are fundamental domains which I think will need to get adopted into the architectural shift. First, it's customer operated control planes. So organizations, they will need to maintain direct operational authority over platform management, deployment decisions, systems configurations without vendor intermediation. So that becomes a customer operated control plane. Second is going to be in-boundary identity and keys. So all authentication, authorization, encryption keys, and access management remain within the jurisdictional boundaries under the customer's control, which also becomes, again, very critical, particularly for regulated enterprises. Third is around local logs and telemetry. So comprehensive operational data, system telemetry, and audit trails are generated, they are stored and managed entirely within the sovereignty boundary, right? And the fourth one is around governed AI inference, which means AI model development, inference execution, agent operations, they all occur under the local governance, particularly with full traceability and oversight. And so this whole concept and a fundamental architectural shift, I think, is going to become really, really important, particularly, I think, for organizations that are, more regulated. But I think even as we move forward, I think for essential enterprises, this is going to become very, very relevant.
But Sandeep, how do you see this changing the playing field? Airtel was first off the bat with its sovereign cloud. You're now saying that you're going to be deploying your sovereign core service by the middle of this year. How does this change the playing field?
I think this is something that will have to evolve over a period of time within India, and I think it will require choice and control to be built into the technology. So what we are finding, and this isn't just in India, Shireen. This is something that is a dialogue that's shaping in many jurisdictions around the world, where the way for organizations to keep pace with local, cross-border, and sector-specific regulations and standards, and in an AI era where you require a proof of where data resides, who can access, who administers the platform, and where AI models run, and how inference is managed, that is becoming more and more relevant. And that's precisely why we built IBM Sovereign Core, because I think it is something that is going to evolve, not just in this jurisdiction, but I think in jurisdictions around the world.
Around the world. Sandeep, before I let you go, and very quickly, we've seen that euphoria as far as the tech stocks are concerned, continuing to see the jaw-dropping AI capex build-out. But the question mark now on whether we're in a period of a SaaS collapse, so to speak, your take on what we're seeing and the prognosis.
Did you say that again? What was the term you used?
The SaaS collapse.
SaaS collapse. I honestly, look, I don't know if there's going to be a SaaS collapse as such, and net of it, I think ultimately, I think we will find that, and I've always said, AI is more like augmented intelligence, right? And it will require different forms of work where you will have efficiencies that will come through the fact that you're using AI for code development and others. But in terms of how that transforms organizations, that is going to require sort of a joint work between what we do with people, as well as how we use AI to drive more and more efficiencies.
Sandeep Patel, always a pleasure. Many thanks for joining us to take us through the IBM report on why data sovereignty is going to be a crucial aspect that boardrooms decide on. Many thanks for joining us here on Business 360. With that, it is time for us to wrap up this edition of Business 360. Do stay tuned. We're back in a minute with plenty more on CNBC TV 18.